Welcome back. You're watching us here on Chartbusters. Let's get in. A market call coming in from Sacchitanand Uttekar. Sachi, if you could give us a sense on the Nifty and the way it goes from here on, along with some of your stock calls as well.
Good morning, Mangalam. Good morning, Nigel. Clearly, yesterday we saw very strong recovery from the intraday low, but the Nifty, is still waiting for a confirmatory close above that 200-day exponential moving average support. Even today, we have started, on a weak note. If in fact the high point of the day is also below that 200-day exponential moving average, so probably we may see some further slippages. If you look at the entire data set, it is clearly exhibiting that unless we don't see the Nifty, trending above that 23,640 mark, we may not see incremental strength. But on the lower side, we may see it slipping towards 23,450, 500 kind of a zone. So I think it's better to avoid any long positions in Nifty as of now. The trigger on the higher side is awaited. 23,640 would be the level above which when one can start building aggressive long positions. When we look at stocks, what we are trying to target here is stocks which are showing turnaround and have been in a low top, low bottom sequence wherein some pattern reversals are confirmed. So the first stock on our radar has been Tata Elxsi. If you look at the overall structure, on the daily scale, it was trending lower. But yesterday, again, we saw a bullish hammer formation exhibiting near its multi-month support at 6,300. If you look at the 30 minutes RSI, it was showing positive divergence, and plus yesterday as well as today we have seen some short covering data. So probably we may see a strong reversal play here unfolding. On the higher side, we are expecting that the stock will again trend towards its 50 DEMA resistance level, which is placed at 69.60. From a trading perspective, the target is placed at 67.80, and we are recommending building long positions in Tata Elxsi. The stop loss for the trade can be placed at 64.80 on a closing basis. The other stock which has shown some signs of incremental strength is M&M Financials. It was trending higher since a couple of trading sessions, but if you look at the daily structure, it looks like a classic triangle formation. The range was contracting, and probably the breakout at around 280, 285 zone could expand this particular trading range. So we are expecting a good short covering move here unfolding in M&M Financials, and that's why I recommended it to our clients as well. 272 should be the stop loss for the trade. On the higher side, we may see a swing towards 305, and eventually a pattern target is placed around 320, and that's why we are recommending building fresh long positions in M&M Financial Futures with a stop loss at 272.
But just one word, you're saying avoid long positions on the Nifty, and that's playing out because as we speak, the Nifty has suddenly taken a sharp dive. L&T has moved to the low point of the day. Support levels on the Nifty, what's the number?
Nigel, I think the first support was at around 23,560, and I think we may see further slippages towards 23,450. I think that is the point wherein some contra longs can be considered at least for the day. But from a strong reversal point of view, we need a confirmatory close above 23,640 from here on. So I think this slippages may continue. One can retain their short positions, but near to that 23,450 mark, I would recommend to book profits for the day.
All right, we take that point. Yesterday's low 23,495 thereabouts, and December 31st low 23,460. Important marks to keep an eye out on. 23,450 is an important support as per Sacchitanand. We take a short break. In fact, before we do that,